Hey guys, and welcome to another episode of Monday Mortgage Madness. I'm Sean LaRue with Franklin Loan Center. I hope you're having a great day, because I am too. Today we're going to be talking about first-time homebuyer programs with the minimum amount down. We have a couple of different loan programs that are available. Two of the ones that I'm going to specifically be talking about today is going to be the HomeReady and the HomePossible programs. What I like about these programs is that they're phenomenal for first-time home buyers. The mortgage insurance premiums are a little bit lower, and it's a great way to get in with conventional financing, with non-traditional income, if you have good credit. And there's some really great opportunities with this program that we found for first-time home buyers. So these programs have very similar names, HomePossible and HomeReady. They are actually two different types of programs that are allowed for first-time home buyers, and also there are some income limitations. I've talked about this in some other videos as well. There's a census tract and some other things that we'll be getting into in this video. HomeReady and HomePossible are two of the most popular low down payment programs for mortgages. Both programs offer unique features that improve your ability to qualify for a loan. These programs are also really great for home buyers who may not have the highest reportable income, and you might not have all of the resources that everybody else has available to you. One of the things that I like about HomeReady is that this program actually allows you to qualify with non-traditional income sources. And what that means is that you can have a non-occupant co-borrower, like a brother, sister, or a parent, actually go on the loan with you in order to qualify, but you don't actually have to have them live in the property with you. A lot of these programs do require that you're actually living in the property if it's a primary residence program, and in order to use the income, sometimes you have to actually live in the property. So that's not the case with this loan program. The HomeReady program is also phenomenal for borrowers who have non-traditional credit profiles. I've been seeing this a lot in the last few weeks, where you just don't have a lot of credit, you're using your debit cards a lot, you're not using credit cards, which you would think that that's actually a better situation, that you're not overextended or you have a lot of outstanding credit. But if you don't have the traditional 3 different lines of credit over the last 24 months, 36 months, or whatever, this is a great program if you have what's called thin credit in order to qualify and get a loan with some great interest rates. As I mentioned before, this program, if you have really good credit, you're going to get such discounted mortgage insurance. It's crazy. The factors that they use are anywhere from, I've seen them as low as 0.22% of your loan amount per year, all the way up to 0.89. It all depends on the FICO score. So if you're using these programs and you have like a sub 700 FICO, the mortgage insurance premium rate is actually going to vary based on the amount of the down payment you put, but also your FICO score. The HomeReady program is excellent for single family homes, or even condos, or gated communities, or planned unit developments. If you're paying an HOA fee, it's not necessarily going to disqualify you. We have a lot of properties in this area that you'll likely be looking at, and those property types are totally acceptable. You can also do it on manufactured homes with a permanent foundation. That form, we're going to want to make sure that something's recorded with title for the 433A form with manufactured housing. So that's another great opportunity if you are a low income borrower, maybe you don't make a lot of money. You can actually qualify for this low down payment program on manufactured homes as well. So I thought that was really interesting. Borrower income limits for the HomeReady program. There's no income limit if you are in a low income census tract. There's a link available for that. You just search for the property address and verify if the property is in a low income tract. Otherwise, you're going to be at 100% of the median income for the county you're purchasing in for all other properties who may not be within that no income census tract. So, it depends on where you're at, which county you're in. Some of these programs will allow you to go up to the 700,000 loan amount level. Here in Riverside County, we're kind of maxed out at about a $400,000 limit on the sales price on these programs. We have to figure out if there's any income limitations in the qualification as well. A bunch of different things to consider. It depends on your income and credit. It depends on the property you're buying, the property type, and where it's located. So all of these specifics go into making the decision on if you're going to be qualified for this or not. And so when you're talking to the bank and saying, hey, give me your best rate, what's your best rate? It's a little hard to tell sometimes without the loan application what the rates are actually going to be unless we have all of the documentation and the credit to verify your income limits and where you're at on everything. So that's a little bit about the HomeReady program. Oh man, another thing I really like about this program is that you can actually use it for duplexes, triplexes, and fourplexes as well. So if you're going to live in one of the units and you want to create some rental income or get an investment property, you live in one of the units, you can rent the other side out, or you'll be in one unit. If it's a triplex, you rent the other two out. It's pretty phenomenal that you can combine this program with something like that. The minimum borrower contribution on a single family home and condos is going to be 0, which means that you can actually have or receive a gift from a family member to document the down payment. So on single family homes and condos, you're looking at no minimum contribution from the buyer. But if you're looking at those 2 to 4 units, we're looking at no money down if you're at 80% loan to value or 20% down. But there'll be a minimum contribution of at least 3% if you're going with that duplex, triplex, or fourplex situation. And next up, we're going to be talking about HomePossible. All right, so next up we've got the HomePossible loan program. Now these are very similar. There are a few minor differences. So in the HomePossible program, they're first-time home buyers, move-up buyers, and retirees, families in low-income tracts, and very, very, very low and low to moderate income borrowers. So this program is going to be great for you guys. These are for purchase transactions, no cash out. So you can't get any cash out on these programs. But they've got a really phenomenal low mortgage insurance premium, as we talked about that as well earlier in the video. There are no required reserves for one unit properties. And so that's a pretty big deal. Sometimes the banks want you to have 2, 3, 4, or up to 6 months of reserves for the monthly payments. So that's not a requirement in this program. And you're getting the benefit of the lower mortgage insurance as well. Again, with the HomePossible program, you're looking at 1 to 4 units, condos, PUDs, and manufactured homes. So there's a lot of variety out there with the types of properties that you can purchase. Obviously, these are owner-occupied properties only. This has to be a primary residence loan. You actually have to occupy the property, and it has to make sense with underwriting as well, where you're working, how long you've been working there, what the commute is looking like. So all different things to consider when you're getting approved for a loan. So typically for these programs, we're looking at a 660 FICO score. The reason for that is that these are conventional loan programs, so we'll want those FICO scores to be a little bit higher to qualify for these better programs, the lower mortgage insurance and the low money down. FHA is always a good alternative to this. Cal HFA, which I'll get to in another video, and we're talking about the down payment assistance programs with the first, second, and thirds. What I like about these programs is that you can combine them with some down payment assistance programs. You just have to be smart about it. Make sure you've got your property type all locked down and determined, and then you're just coupling it with the different loan programs that are available, My Home and Zip, and some of these other things to make sure that if you are not able to meet the minimum down payment requirement, that we can actually work with you and couple the programs with some down payment assistance programs and structure it with maybe some seller credits towards your closing costs as well. Both of these programs do have credit counseling attached to them. It's like $75 to $100 depending on the one that we go with, and both borrowers will need to complete the counseling and get their certificate prior to closing. So that's a big deal as well. We'll try to put the links for those programs, the property income eligibility, and the property eligibility, and then the income eligibility as well. There's a couple of different ways to verify that. I hope you enjoyed the information here. If you're a first-time home buyer and you just don't know where to start, you have questions, I'm here for you. Ask your questions, work with a professional, work with somebody who's been in the industry for a long time. We're here to help you, help understand what programs and options you have available. If you thought that this video was very helpful, give it a thumbs up. I appreciate you guys tuning in. If you like it, remember to subscribe. Hit the bell for those notifications as I'm constantly putting out new information to help educate home buyers and real estate agents on the market and what we're putting together for financing and financing programs for home buyers and real estate agents in today's market. Thank you so much for joining me. Stay hungry and stay positive out there. I'm Sean LaRue with Franklin Loan Center. I hope you make it a great day. Cheers.